Welcome back, Alpha Hunters. Hope everybody is having a great and fantastic week, or hopefully you did have a great and fantastic week. The markets are closed for the week of March the 8th, and let's check and see just what went on this week. There was some moving and shaking that went on, and so let's talk about it, okay? Not really too much of a gap on the SPY on Monday, a little bit of a gap down, but we kind of just traded higher. Nice little pump there towards the, into the last hour and a half of the day. But then the last hour came and we kind of just dropped off. And then that continued into Tuesday morning. Okay. Market, probably feeling a little bit ahead of itself. So we had a little decent pullback Tuesday, or started, right there at the end of the day, Monday, continued into Tuesday. Nice little gap down, just kind of rolled over into the afternoon. Last 30 minutes, nice little pump here, looking pretty good. Nice gap up here on Wednesday, pulled back, pushed higher, kind of got a little double top, kind of rolled over. Nice little bounce there towards the end of the day, and then nice little gap up again on Thursday. And then, it just kind of just grinded higher until we got to about the last 2 hours of the day. Pretty good pullback, and then a little bit of a bounce there towards the end of the day. And then on Friday, nice gap up, traded higher, and then it rolled over pretty hard there on Friday. Nice bounce there, kind of the second half of the day, and then it just rolled over at the end of the day, kind of that last hour, getting down roughly to the daily low, not breaking the daily low, but just kind of closing kind of weak. I could see some bearishness creep back into the market early this next week because of how we closed, but we'll talk a little bit more about the game plan a little bit later. What's very interesting, and you'll notice, is for how much the market was moving, it was a moving week. It really was. We didn't close too indifferent from how we opened. I mean, this is where we opened, and we closed roughly 30 cents lower. So from the close of last week, we closed roughly a point lower. For how much we moved, and let me just see for from when we closed last week, I'll say roughly there. I mean, we dropped 1.5%, then we went on to rally, then we were up about 1% on the week, and then there you go, basically closed within 0.25% down for the week. So it was kind of a moving week. Like we were moving, and that's just on the SPY. That's not even on the Qs. Now, as far as the data that we did get this week, remember, I kind of thought Monday, Tuesday would be kind of quiet, and then we get some volatility probably creep in on Wednesday and Thursday, Friday, the second half of this week. But, we kind of got that volatility there on Tuesday. And probably a lot of that just had to do with just profit taking before we got to catalysts that we were going to start to have on Wednesday. So it kind of made sense. I kind of didn't think about that last week on the game plan. But, that kind of is what it is. You're not going to get every little movement correct on the market. Fed Chair Powell did testify Wednesday, Thursday. I don't think he really said too much. That was indifferent from what we already didn't, know. So not really a big deal. Jolts data, though, that came in Wednesday morning was a little light than what was expected. Okay, not a big deal. I was expecting 8.9 million jobs. Job listings, I guess, and it came in at 8.863 million. Non-farm payrolls and unemployment rate that we got Friday morning was, to me, a little bit more of the interesting one. Really, it was, to me, an unemployment rate. This is one that, if you've been paying attention to the channel, I think is massively important. Unemployment rate came in at 3.9%. The market was expecting 3.7%, which is consistent with how it's been the past 3 months. The past 3 months, I believe it's the past 3 months, it's been at 3.7%. So we did have a little bit of an uptick there, and not counting the auto strike that we had kind of in the second half of last year. This is the highest it's been in the past several years. All right, take a look here at sector rotation. Yeah, tech was like the main driver, like every day this week. It really was. You can see a pretty good drawdown here on tech, and it's this teal line that we got here. So nice little drawdown here on tech on Tuesday. So you saw a lot of selling. It kind of it bounced all the way kind of back up roughly to Friday morning, and then that's when we got rolled. Got the rollover, and you see that tech rolled over really pretty kind of hard. So yeah, you got XLK there, tech down 1.6% on the week. Discretionaries down 2.5%. Blame that on Tesla, TSLA. Oof, rough week. XLC Communications, negative 0.5% for the week. So those are your big heavyweight sectors on the market, or at least that make up the S&P 500, all negative there on the week. And then we got everything else outperformed pretty good, and actually we're positive. All the other sectors were positive, so pretty good rotation out there for the week. We'll see if that continues going forward. Maybe, maybe not. We'll see. Healthcare, though, barely positive. Industrials, financial staples, energies, all pretty good positive there. Real estate, materials, nice week there. Utilities, the breadwinner of the week, up 3.3%. Woo, man, pay them electric bills. All right, take a look here at the VIX for the week. Nice little climb throughout the week. I was really kind of surprised that we didn't have a higher open on Monday. We did have a little bit of a gap up, but I was kind of surprised we didn't have a higher open on Monday. Just from all the catalysts, the Fed was talking, or Fed Chairman Powell was talking at the U.S. Congress. So, yeah, it's kind of surprised that we didn't have a higher open there on the VIX. But you can see it just kind of traded higher throughout the week. And so much for the pull down that we were getting. And we kind of were looking something at, at some kind of line like this, I believe, last week. And you can see, we have been bouncing off of this upward trending level, and we did bounce off of it last Friday. So it's kind of interesting that did bounce there, and we have continued to go higher. Anyways, that was kind of an interesting one. I didn't really think we would do that with how how the VIX looked last week. I thought we would go a little bit lower. All right, take a look here at the DXY, the dollar index. So earlier in the week, as we started to get some bearish days kind of creeping in, I kind of mentioned 103 to 102.5 would be a pretty good spot to no longer be bearish, or to look for support there. Like if you've been bearish, you saw the breakdown coming, you played it, like that would be the zone where you probably say, okay, I'm going to take it off here. But if we break through that, you're going to look for the retest into that zone and just take it bearish. The thing is well, look at that huge lower wick hammer that we got there on Friday. After we got the data that we got, jobs data that we got Friday morning, you can see that we had a nasty snap down and then it just traded higher all day. So we could definitely see a little bit of a pause here. That's at least what that says. We might pause here maybe a couple days. Maybe the moving average just come down and push it down later. Or maybe that was kind of the bounce, and we'll be back off to the races back higher. So that's going to take some time to kind of see here over the next couple of days. But I would say for now, that was not going to be the spot to be bearish. Gold. Whew, gold. Talking about gold. Everybody's talking about gold. A lot of people talking about gold. If they're not talking about Nvidia or Bitcoin, they're talking about gold. There you go. But yeah, we're seeing some pretty good activity here on the GLD, all-time highs here on the GLD at least. If you're going to take a look at gold futures all-time high. Look at this breakout day, getting above that high that we put in December. And this thing looks so stinking good. Just all the flow, all the volume coming in here over the past week and a day, because it's really kind of started almost like last Friday. With that big push higher on March 1st. So March has been very nice to gold. And honestly, I don't see a reason why you would expect it to drop off, roll over, be hugely bearish. I would imagine you're probably in a pretty good uptrend. It might pause here for a couple days and just continue to push higher, but eventually we'll have a pullback. Maybe we do have that here in the next couple of weeks. We have a pullback, but you're going to get buyers to step in with gold breaching clearly above some all-time high type levels and holding this week. Very nice move on gold this week. 10-year yield. So this is another one that's kind of like the dollar. Had a nice little bearish breakdown this week. I kind of mentioned last week, with that huge kind of lower breakdown there. If we snapped back and took it out and made it back above that, you're probably just looking for yields to go higher. Monday we just kind of had a resting day, and then we just kind of broke down there Tuesday, Wednesday. This was a pretty good spot, though, to see it pause. At least pause. It was right around that 4% level. The one thing I will say, I'm going to bring up the 30 year because this is a little bit more definitive here. We do have upward trending highs here on the long-term yields. Now, today's price action on Friday does not look the best. We do have a little bit of an upper wick there, so it might just consolidate here for a couple days and then break down. If that happens, you're just going to be bullish on bonds. Like, you're just going to be bullish on bonds. There's not much else to say. If we consolidate and start to push back higher, though, and get above, start to get back up to the 5.5 level, like that's going to look super, super good, especially if we take out that 5.5 high, that we put in back in February. So that's the 30-year yield. And I get it's not exactly the 10-year yield that I look at most of the time, but it is one that it kind of depends on how you look at, the U.S. debt to GDP yields and unemployment. Put out, video about that last week, and it is one that I think you would much rather see unemployment start to creep higher rather than stay lower and then have the bond market rally on yields later because debt is too high on the U.S. For the U.S. government. So I'm not going to go into all that on this video, but that is something that I would be very cautious about, and I would be definitely watching for. And one thing that for everybody saying, oh yeah, it's not a big deal. Well, just remember we are in a longer term up cycle on yields, right? This is a monthly chart, right? We saw yields bottom back in 2020 when we had COVID dropped everything, but yields bottomed and now they are rising along with the national debt, along with the stock market, and all that stuff. And we're not really seeing too much of the fallout from rising yield yet. So if we start to rise again, I think there's going to be a lot of people realize that we have a huge issue as too much debt, and that debt just got way more expensive. And then there will be a lot less debt being issued later on, and that would that's just going to cause some issues, right? So I'll leave it there. I'm not going to go into all that because I could spend a whole hour on that. I'm not going to do that. 10 and 2 inversion. Nice little double bottom here over the past couple of weeks. Potentially. Still have declining highs, declining lows. We'll see what happens here. I think we're just in a longer term kind of basing formation consolidation type area. Maybe it lasts here for another couple months and we start to curl up. Maybe as we go into April, May, June. Maybe May or June, something like that. Yeah, if we just continue to base here, then we might be pushing it higher later. HYG, high yield corporate bonds. So kind of mentioned, if we break down on yields, look for bonds to go higher. HYG actually wasn't all that strong this week. I was kind of surprised. Nice little false breakout wick that we got today on Friday. And other than that, we're still just in this range. So I'll just leave it there. LQD, nice little push higher throughout the week. This is a little bit more bullish, which would make a lot more sense with how kind of bearish we saw the bond yields this week. So that makes a little bit more sense. Could just be a retest higher into some of these previous lows, consolidation area. Maybe we'll roll over as maybe yields will start to bounce. So we'll have to take a look at that later. Take a look at TLT, downtrending highs. Look at this nice little connection here with these highs. So this is probably where I would look to be bullish if yields did break that uptrending line, because the TLT course correlates very well with the yields, with those long-term yields. So if you're looking at the long-term yields or watching those long-term yields, the TLT would be how I would play it bullish if we broke down on yields this next week, which it's possible. We just start to go sideways Monday and Tuesday on yields. We're not really bouncing. We're not quite breaking down. I could see taking a position saying, hey, you know what? I think we'll pop up out of here because the TLT will probably just go sideways like yields would be going sideways, and then eventually we'll just pop out of here. And we'll see if that happens. All right, so this is a quick look at the U.S. unemployment rate. And this isn't too much of what we kind of just don't know. I just want to talk about this real quick since we got the unemployment data Friday morning. We definitely had that drawdown of unemployment as everybody got back into working following COVID. So we had unemployment drop off late 21, even into early 22. Got down to really some crazy historical lows down here around 3.6 to 3.4 levels. And that was kind of where we based there for most of the year of 22 and even the beginning of 23 But you notice that we've been in an uptrend ever since April of 23. We've had a nice little uptrend here, kind of just going here. Now, one thing I was kind of talking about on the live stream today is this little pop that we had here back in August, September, October of 23. This is a little bit inflated because the auto union strike. And if you really want to think about it this way, think about it more of like maybe we take off like 0.2%, I guess is kind of the point from those levels, and you probably get something that looks like this of an unemployment rate. So this is probably just inflated a little bit just from the the strike that we had that lasted a couple months, and then now we're starting to see it increase again. So that's about the only thing I want to say about that. If we start to really kind of run up here, I think the labor market is not going to be, it's not bad. It's not going to be horrible. The issue is going to be with how's the bond market going to treat it, and how are yields going to, I guess, change? Are they going to see the rise in an unemployment rate, and how are they going to react? How are yields going to react? I don't think it'll be good because, the debt to GDP number is at historical levels in the US, and if you have less people paying taxes, that's less revenue. That just means that your debt to GDP number is even more going to be more inflated. Even if you just left the debt flat, but that's not going to stay. That's not going to happen. They're going to increase the debt even more because they can't stop spending. So it's just one that if we see unemployment start to really run up to maybe like 4.5–5%, and that can happen pretty quick, over the course of maybe a couple months, that would be an interesting scenario to see, especially with what yields possibly could do. All right, so I'm not going to go through a bunch of individual stocks, but I'll just kind of quickly show the heat map that kind of went on for the week. Tesla had a bad week. So did AAPL. They both had some pretty massive breakdowns. Microsoft had a bad week. They didn't have a massive breakdown. Google had a little bit of a breakdown, but kind of bounced back towards the end of the week a little bit. Meta continued higher early in the week. It was an NVIDIA story. Again, it's NVIDIA. There's starting to be a lot more stocks participate. You can see financials, very good activity there. Manufacturing, pretty good activity. Utilities, we know how utilities were throughout the week. So there's quite a bit of green out there, and it's starting to be a little bit more red out here in the big tech world. There was only two big tech companies that were actually positive for the week, Meta and NVIDIA. There's a lot of other tech names that were positive, but a lot of them semiconductors, right? But it's not all great out there. And if you take a look at the year to date, there's the Sig Six that I want to call them, Alphabet and AAPL, that are negative. I don't really count Tesla in that. I just don't think they're all that. They have a lot of issues. And but you see NVIDIA's up 77%. AVGO's up almost 20%. AMD's up 44%. Qualcomm's up 20%. Meta's up 44%. Microsoft's only up 8.5%. So there's clear winners. A lot of them in semiconductor areas. There's some other clear winners. Netflix is doing pretty good, Meta. But if you look at some of the others, like especially manufacturing, CAT, 16%, AMAT up 28.5%, LRCX up 24.5%, GE since the bottom that the market put in October of 22 has been on an absolute tear. If you want to go check out that chart, they're up 32% for the year. So there's a lot of things that are not going perfectly. And AAPL, we all know how big AAPL is. How long is the market continue to go higher if AAPL doesn't, participate eventually? All right, since this is already long enough, let's just run through these 5 ETFs real quick. RSP finally got to that all-time high on Thursday. Actually, briefly got there on Wednesday. Held it easily Thursday, held it on Friday. So RSP, the broadening out of the market is not a bad thing, except that's what so many people wanted, but so many people were also, over the past year and a half, were saying, oh yeah, everything else was priced fairly, but you should still chase tech. But since everything else is priced fairly, is it really good that they start to participate more than tech? or outperform tech. I don't know. Honestly, I don't know. That's a tough one. I mean, you do want to see a broad-based rally, but I would want to see way more of a pullback before that happened. DIA, the Dow Jones Industrial Average. You can definitely see we got some lower highs coming in here, lower lows as well. So we got a little bit of a downtrend. Could be a flag pattern. If you looked at it on a weekly, I'm sure you'd probably see that as well. But the thing I'll say is UNH. I'll briefly cover one stock. UNH. This thing has been smoked over the past 2 weeks, and if you want to know why the DIA has not been performing, this thing has gotten absolutely hit. There was apparently some hack or something like that happened with UNH, and so they are really weighing down the Dow Jones. So, yeah, that's all I got for the Dow. Other than that, I mean, it's probably okay. It's not gonna like fall off or anything. It doesn't look like it will. It might struggle a little bit until UNH gets things figured out. IWM, very nice move this week. Not all-time highs, but we're trying to break through this zone, and we had a really hard time this week. Monday it got up, roughly almost that 208 level, and it faded back down all the way into Tuesday. Thursday it threw an upper wick almost to 208, and then Friday we got up to above 208, almost 209 on the open. We traded up to 210, and then it just dropped like a rock back down to like 205, 206 area. So it is struggle busting to get through this zone. And there is a lot of resistance above it. There's a lot of prior lows going all the way back to 2021. There's even this top here in March of 22. So there is quite a bit of stuff above it. And I don't want to say maybe it reverses and breaks down, but we need to see it get through this zone before you want to be bullish at this level. I think just being hands off right now on the IWM makes a lot of sense to me, and I would just be patient. Let this thing get above this level because it's very clearly having some issues here. The Qs, those triple busy Qs. Oh man, dude, these guys busy all week. So yeah, the lower part of this week, that would be the stop loss level. It was kind of interesting because I moved it up to the low of last week, and that was where Tuesday we traded right down to that level. We got just below last week. Let me go to an hourly time frame. You see it very quickly. This is the low of last week right here, and we very quickly snagged that low, and that didn't last long. That was 10 minutes, but it just happened over the hourly change here on the chart, but it did not last long, and it got bought right up there on Tuesday. Anyways, Qs, not a major breakdown yet. I don't like the price action that we got this week on the Qs. I really don't. Kind of mentioned this last week. This Friday, the Friday that we got last week, this huge extension. Like, hey, don't have to be bullish here. There will be plenty of times. I gave you plenty of examples where we had these huge extensions, and then, if you look to the right, there's plenty of times where we continue to trade at that level. Even this one back over here on January 19th. Like, there's plenty of time. Give it time. Let it figure it out. We actually broke that down, traded back higher on Friday, new all-time high, and then broke down again. So the thing I'll say is I don't like the price action because there was a lot of bearishness that came in on Tuesday. There was a lot of bearishness that then came in on Friday. And the days we were bullish, Wednesday and Thursday, outside of just people buying the dip, there wasn't really a great reason at all. So we did have AVGO report earnings Thursday after the bell. To me, the only thing they really confirmed was the semiconductor story or AI story. It's an NVIDIA story. NVIDIA gapped up and faded really hard on Friday. So there might be some people that see the price action on Friday, especially in a lot of those names that are up big time, and say, you know what, there is big time pockets here in some of these names. I'm gonna take some profits, and I could see some selling come back in on Monday and Tuesday as people just look to be a little bit protective. I did take a little bit of a bearish position for that reason on its options expiring this next Tuesday. But if we break this level, the lower parts of the past 2 weeks, I guess this past week and the week before, I would say we're probably just due for a pretty good pullback, maybe roughly 5 to 8% on the Qs and SPY. And at that point in time, I see people probably buying the dip. At that point in time, then also we will re-examine and see, where we might be moving to. Because if yields start to rally as well, yeah, maybe we start to look a little bit more bearish second half of the year. But until we get to that point in time, not really a big deal. SPY, everything I just said about the Qs, but the SPY has actually been performing better because, well, I mean, we've seen a little bit more of that broadening out. And that's why I kind of showed that heat map. We've seen a little bit more of the broadening out of the rally. A lot more other stocks, industrials, utilities, did pretty well this week. Everything else besides the big tech names did really well this week. So, SPY might not break this week's low before the Qs. Probably won't because the SPY got a little bit more room to run, and the Qs typically lead in whatever direction we go. So if the Qs do break down, obviously the SPY will go with it. But if the Qs pull back 8%, the SPY maybe pulls back 5% or something like that. If we break down from our current levels back down to the previous all-time high, that'd be about 6.25%. Is that a decent pullback? Yeah, that is actually a decent pullback, and you honestly would be bullish at that point in time. There's too much momentum over the past 4 months to say one little breakdown and you're bearish for the next year. Like, no, that's not how it's going to work. It takes a lot more time than that to set up massive bearish movements. I know this went a little bit long, talked a little bit about some other things, but I'm not going to go deep into everything else I really want to talk about. I kind of break that up throughout the week. That way it's not all drowned out in like a 2-hour video. So, Alpha Hunters, have a great weekend. Take care, and we'll see what we get this next week. Expect early week bearishness, and if we do get below this level, I expect people probably buy and be bullish, and you're probably looking for the retest up into this level, and you're probably just taking that back down for a deeper correction. And that might happen here over the that might happen over the month of March and April. So, guys, don't be trying to rush into be bearish. It's kind of tough right now, especially with that much momentum out there. Alpha Hunters, have a great weekend.